Welcome to Canadian SME Small Business Podcast, presenting expert perspectives in engaging discussions on the challenges and triumphs of the Canadian marketplace. I'm your host, Shiraz Sadiq. On today's episode, money management, not as a CRA requirement, but as a business management tool to get the insight you need to grow your business. Joining us is Daryl Ching, founder and owner of Vistance Capital Advisory. As a graduate from Western, in the Honors Economics program, he brings 10 plus years of investment banking experience. With RBC Capital Markets, he structured multi-billion-dollar transactions to working with small businesses as a CFO preparing financial statements. Let's just say he has the breadth of real-life experience to speak to effective financial management. We'll dive into why money management is a key indicator of success and how you can win in business with a few ideas Daryl will share with us today. Welcome, everyone. My name is Shiraz Sadiq, your host for Small Business Podcasts. Of course, today we're in conversation with Daryl Ching of Vistance Capital. Daryl, how's your day going so far?
Going great. I love the September rush because you have that slow period in August. But in September, everyone's charging back. Everyone's ready to get back to business. So we're very busy right now.
You know, it's interesting that was probably the most driest 2 last weeks of August that I have ever experienced. And you're right, it just hockey sticked up with the response. I guess in your business you experienced the exact same thing.
For sure. It's like, and there's a bit of a lull for back to school too for the first week of September because people are trying to figure that out. But as soon as we get through back to school, it's every conversation that you started, even back in July, people are ready to go. And so it's a great feeling.
And it's really interesting as students get back to school, it's almost like the business world is getting back at it. A part of that is picking up projects, picking up important conversations that they may have delayed. Now, in your world, what is a typical conversation with a client comprised of? What's on their minds, your clients typically?
So there's generally two issues that come up with clients. And unfortunately, most of my clients approach me because they've already experienced a problem. The first one is, I was going through the due diligence process because I was trying to get funding. So I provided my financial statements to a bank for a loan, or I provided to an investor. We started going through due diligence, and I was horrified to find out that my financial statements are actually a complete mess.
Okay.
That's the first issue that comes up. The second issue and the second reason why people approach us is because based on their accounting, they're not getting a clear understanding of how to improve their operations. And it could be, wow, we're losing money, but I don't really see how. Or it seems to me like I thought I was supposed to make this gross profit margin, but I'm not. I have an accountant giving me a profit and loss statement that shows me that I'm profitable, but my bank balance keeps dropping. So I don't get why. So when it comes to a lot of these operational issues that aren't necessarily addressed through a simple bookkeeper processing through QuickBooks and doing a quick printout out of QuickBooks, people are not getting answers. And those are the two main reasons why people approach us.
So it's really interesting the way you're making a difference and I should say a distinction. Getting your HST, for example, filed is the basics from an accounting CRA perspective. But what you're speaking about is using your financials as a management tool to manage your business effectively, which is a greater depth that, perhaps the average bear doesn't understand the power of managing your finances to manage your overall business.
And I think that's precisely it, Shiraz. And if we trace back to why that is, if you look at a lot of the training that the accountants have that have traditionally done the CPA and have gone to one of the accounting firms, most of the work they do is tax and audit.
Okay.
And so that's where a lot of their training resides. So when they step into a business for the very first time and a CFO asks a question like, how should we improve the gross margin in this production? What can we do to improve the operational efficiency so that we are more profitable? Those are very difficult questions for a typical accountant to answer if they haven't worked directly in a business and had operations experience. And so I think what takes us apart is our knowledge of operations, our business acumen mixed with the accounting, and figuring out how to bring those two together so they work together. rather than just having knowledge in one side.
And that's powerful. That changes everything. That's the difference between what a consultancy like what you all do differs in the value add and the management elements that you can add to all of your clients. So if I were to ask you a question, what does Vistance Capital do? What are some of the core deliverables that you offer to the market?
So we actually started as a capital raising firm because my background was in investment
Okay.
banking. And the reason why I got into accounting was because I had enough clients that we got term sheets for when we were successful getting money from investors. And then during the due diligence process, that's when I found out financial statements are a mess that required cleanup. So it occurred to me that small businesses are being underserviced, that their financials are not in good shape. And when I asked the people that got the capital, okay, what's your plan to deploy the capital now? And they didn't have one. They just said, I'll work on my gut and I'll deploy the capital in the marketplace. That scared me. And so because from my perspective, a lot of companies raise capital, especially
Mhm.
Series A, to get their $3 to $5 million of funding, and then they blow the cash and run out of cash and have to go back to market again. So, our discovery was there is a need not only for doing proper financial statements, but providing the CFO guidance of let me create a budget so we can do budget versus actual every month to make sure the money is being spent prudently, to make sure that we're not going off track from the business plan, to make sure we're managing expenses, right? Because the other thing I'll say is a lot of people focus on sales and growing revenue, but profit has two sides of the equation. There's sales and there's expenses.
Okay,
And
fair enough.
expenses are actually easier to control than sales are, than generating new sales.
Right.
So if you took some effort to make sure your expenses are lean, you could actually increase profitability much easier than going out and chasing new revenue sources. So
Yeah,
from our
that
perspective, I call it operational accounting. It's not tax
operate. Okay.
accounting, it's operational and using accounting as a tool to improve your business.
Yeah, so you're widening the gap
Mhm.
between revenue and expense by hammering down your expenses. Okay. I'm in the sales world, right? And so sometimes expense that I have to put out
Mhm.
to generate revenue,
Mhm.
because you got to sometimes spend money in a marketing campaign effort programming level to generate sales. So, how do you distinguish between an operational cost and a cost that says, if I spend this, I will get that from a revenue perspective? And how would you represent that then to say, hey, it's still okay to do this, but let's hammer these? Like, how do those conversations typically go?
Excellent question, Shiraz. Obviously, for every business we walk into, there's different expenses that make more sense depending on what industry you're in.
Okay.
No doubt, if you're running a direct to consumer product that requires branding, you're putting a lot of money into branding and marketing because you need to generate general awareness in the marketplace. So we are cognizant that a huge market spend in certain industries makes a lot of sense. What we try to do is make sure that they are measuring their return on investment from their expenses. So if you are, for example, hiring a digital marketing campaign, and you're hiring a company to do your digital marketing, to what extent are you tracking their results? Are tracking cost per click, tracking cost per acquisition, what the lifetime value of your user is? If you are tracking that information and you're getting a return and it's generating sales, then that campaign is paying for itself. But if you're
Yeah.
not monitoring it and you're just leaving it to the
Ah,
side, and next thing you know, you're burning $5,000 a month, but you're getting no sales from it, then that is a waste of money.
ladies and
So
gentlemen, our we're in conversation with Daryl Ching of Vistance Capital, and hopefully you just caught that. What he's not saying is cut all your expenses. He's saying no, 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 no. Be lean, run lean. The costs that you must spend, because there's a COA, a cost of acquisition for net new logos to grow your business and your revenue. But the key to what he's saying is like, yeah, go ahead, put that as a line item as an expense, but are you tracking it? Are you managing it? Are you referring back to so you can tweak, calibrate, and recalibrate the amount of spend? And how much does it actually cost you to get a new client? In the absence of that information, growing your business becomes a challenge because, like he alluded to at the beginning of the conversation, and I love the analogy that you used, Daryl. This is what you said. You said, hey, my sales are going up, but the balance in my bank account is that going down? Folks, if that's a challenge that you've experienced, yeah, that's probably a conversation that you, because you haven't called Daryl yet, is probably why. So please reach out to Daryl and his team and get that type of guidance. Now, that's one scenario. Daryl, what are some other scenarios typically that you get calls about that the average business is experiencing or facing?
So during COVID, we experienced high inflation, and the inflation persists for a long period of time. So, I've had started conversations before COVID with some companies, and I pointed out that the profit and loss statement wasn't entirely accurate. And they said, "Yeah, but I'm making payroll and my bank account balance is going up. So what?" And then
Okay.
inflation hit, and all of a sudden their bank balance started
I
going down. And then they
okay.
said, "Okay,
Okay.
I see the need now to understand my profit and loss statement better." Because what's happening, especially import export, is a complex business where you're importing from abroad and then you're distributing in North America. And there's a
Mhm.
lag of time between when I get my products, I got to store them, and then I got to sell them at a later time. There's several steps in the process from purchase to shipping to the container costs to my storage. Where am I bleeding and losing money so that at the end result, I'm actually coming out losing money when I sell the products? And if you don't have good accounting, you will never know the answer to that question.
So could I akin? I'm a big driver.
Right.
I enjoy cars. I mean, they don't have to be the most expensive thing, but my
Mm-hmm.
sanctuary sometimes is my ride, right? So I can jump in there and I'm like, okay, just my safe place. Get a little music on, maybe a little loud, and I'm gone. And I've always noticed this, that if I take my eyes off the dashboard, I'm gonna run into problems. I don't know how hard I'm revving that engine because I tend to drive a little aggressive, drive a little hard on
Mm-hmm.
myself, a 6 speed. So I'm like, uh, what should be on somebody's financial dashboard that they need to? Because I find that I always overwork my engine,
Yeah.
right? And it's a little running a little hot if I don't keep my eyes on the RPMs, right? And other gauges, of course. What should be on a typical financial dashboard?
Shiraz, you're going to be shocked by the answer, but an accurate profit and loss statement with accrual-based accounting. And you're going to say, well, accurate financial statements, that seems simple. Everyone's got them. And the answer is
Okay.
no, no, they don't. Um, the biggest
Okay.
the biggest problem in the industry, and I am shocked by how often I see this, is that a lot of accountants practice cash-based accounting, which is, in my opinion, I call it lazy accounting. And it's taking a bank statement and just processing all the transactions based on timing of cash flows in the bank statement. And I'll give you an example of
Okay.
why that's a problem. Let's just say I hire a lawyer for some legal services in February, March, and April, but I don't pay my bill till June. Well, the lazy accountant is going to book $50,000 in legal services in 1 month in June, when really it was for legal services I incurred in February, March, and April.
Okay.
So when I pull up my monthly profit and loss statement, they're chunky. You've got a massive loss 1 month, massive profit 1 month, massive loss 1 month, massive profit. And that is what a typical financial statement looks like that's not managed properly.
Okay.
And when you have a financial statement like that, you can never make business decisions. You don't know what's happening. So, from our perspective, the first thing we often do is correct it to accrual based accounting, which means doing expenses and revenues based on the time of when they were incurred, not when the cash was received or the cash went out. And
So,
that will give
ladies
you
and
a
gentlemen,
proper monthly statement.
thank you. Ladies and gentlemen, you can see why I was eager to have Daryl on with us. Are you hearing this? Are you getting this? More so, are you identifying with this? As soon as he began, so I operate two small businesses, and as soon as you began to describe the scenario that you just did, all I saw was myself in the mirror. Well, I'm gonna pay the bills anyways. I got the cash, so who cares when I actually pay it? It does make a difference, doesn't it? Right? When you're looking at your P&L, right? It makes a huge difference.
It does. And Shiraz, I think to some people it just didn't matter when it didn't become an issue, but one day inflation creeps up on you. One day you're going to miss payroll because and you didn't see it coming. One day you're going to have a negative repercussion. And
Wow.
that's when they become clients of ours. And to me, I say, well, why wait until that day? Why not get that sorted out so you prevent something terrible from happening?
Yeah, so ladies and gentlemen, Vistance Capital. It's not only about clean up on aisle six. And sure, he's certain to come in there and help you get through and navigate through a jungle of overgrown weeds that kind of went unattended, and you got to just trudge your way through it for your financials. Him and his team can certainly do that. But why not jump on board in advance to cut off challenges even before they represent themselves? Now, Daryl,
And to
I'm already
convince,
hearing, I'm already hearing my my inner small business mind, right? The entrepreneur in me is like, Shiraz, what he's saying sounds expensive. Like, like he's talking about like a fractional CEO. He's talking about my pseudo CEO.
Mhm.
Wait a second, I'm hearing. Uh, can you break that down for us? Like what, like cost of engagement versus opportunity cost versus, hey, what's the cost if you don't do this versus the cost if you do this? Can you just break down what it actually means to from a real cost perspective?
For sure. Um, I've been in situations before. If we take the example of the company that went to an investor and found out their balance sheet was a mess, a balance sheet mess could go back 3 to 5 years. It could be an opening balance from 5 years ago that's causing you a problem. So if you're talking about a 5 year cleanup to get your financials in shape, you're talking an engagement that costs tens of thousands of dollars because you're going back and you're trying to look at bank statements from
Wow.
2017, right,
Wow.
to
Okay.
clean things up. So that is an expensive endeavor because you're also you're having to go back to vendors and go, can you please print out these statements from 5 years ago? And they
Mm,
charge you for that. None of that
mm,
is ever free when people have to go back to archives and you're
sure.
jogging your memory. You're going, what's that transaction in 2018? Can you remember what you even did last week? So
Wow.
that is an expensive endeavor. And then there's consequences of cash flow in terms of I missed payroll. What's the consequence of that when your employees are told, sorry, but you're going to have to wait a week for your paycheck? Um,
Wow.
or a vendor that you really like and is doing a great job is told, sorry, we're having cash flow issues. Let me pay half your invoice and we'll cover the other half in a month or two. What are the repercussions of that with all the relationships you've built, your reputation in the marketplace, and things like that? So, and you only get a first chance to make a good first impression. So,
Sure.
if you're approaching an investor or a bank and you're showing a financial statement that's very sloppy, what impression do they have of you right on the spot? They're saying, "Oh, you're neglecting your finances." That says something about your character
Mm.
in terms of you don't think having your house in order is important,
Yeah.
and that's a scary message if I'm investing in your business.
Does anyone else feel like he's speaking to your soul? Because I know I'm being convicted about a whole lot of things right now, and I feel like, I'm not a bad person, but sometimes I'd rather focus on what I'm good at and maybe get around to eventually what I'm not. And what I'm not is one of my strong suits isn't the accounting side. I know that
Right.
about myself. You want to have conversations, you want to talk sales, you want to talk marketing, you want to talk strategy. Love it. Let's go. It's so much fun. But what would you say to that person who's like, yeah, I don't know, man. Like I've been maybe even worse, avoiding this for a long time.
Right. So there are a lot of people that try to do it themselves. And I would say to you,
Okay.
Shiraz, is your time best spent trying to figure out how to file your T2 at the year end? Is your time best spent going through all your invoices and receipts and putting them in the QuickBooks? And my
Wow.
guess would be that's probably not the best way for you to use your time, even though you might save money by not spending on an accountant. So if I could get you a bookkeeper and generally our accountants are not bookkeepers, our accountants are trained accountants that know how to book things. A bookkeeper would come and ask you questions about how to book them. Our accountants are trained that they would know what to do. They'd be more efficient. But if I could do that for you for $50 an hour, and you know what, have a manager at about $100 an hour helping you with gross margin analysis and doing that work so that you get actually analytics and a dashboard and a management dashboard.
Mm.
Let us do that work for you at the price of, and from bookkeeping to accounting, the prices range from a few $100s a month. And if you want analytics and you want like a monthly call and you want CFO services, obviously they can creep up to like $7,500 to $10,000. But first of all, imagine that you don't have to think about accounting anymore. It's
Mm.
off your plate. What would
Wow.
you be doing with that time?
Oh,
Well,
oh, I can answer that question.
yeah.
Sleep a lot better.
Great. You'd be selling. You'd be
'Cause
strategizing. You'd be doing
right,
business development.
ladies and gentlemen, as a small business owner, as a business leader, you're experiencing that. Like if there's an area, maybe for you, it's not the accounting. Maybe for you, it's not the development. Maybe for you, it's the sales side because you have a great product, but you don't know how to communicate it. And get the help you need. Give me a shout. But this isn't about sales. This is about even something more relevant to the operational uh, effectiveness and excellence of your overall business. Now, Daryl, how does somebody get a hold of you?
Well, the best way to reach us is probably by going to our website at www.vistancecapital.com. So that's V as in Victor, ISTANCECAPITAL.com. And you can either leave your info there because there's an area for to leave your contact information, or you can send us a direct email at info@vistancecapital.com.
Thank you, Daryl. And thank you for always taking the time to hang out with us and all the great knowledge that you're providing for our audience. Folks, if this is an area that you need to brush up on, get better at, and so you can be freed up to do the things that you were designed to do, then give our man Daryl a call. He's there for you. He's certainly always willing to help out. Again, Daryl, thank you for investing in our audience in a worthwhile way.
Thank you, Shiraz. Really enjoyed the conversation.
Yet another engaging conversation providing key financial insights in managing your business. Thanks once again, Daryl. And of course, we want to thank our partners who make this podcast possible. Our exclusive banking partner, RBC, our exclusive shipping partner, UPS, and our exclusive accounting software partner, Xero, for their unwavering support for the small business community in Canada. We're always pushing out meaningful content, so subscribe now. If your story is worth sharing, reach out. This has been Shiraz Sadiq, empowering the Canadian small business community. Thanks for joining us.